you're now like a content creator who's also a partner or also working at Teal Cap, but like, why did you start your own content?
Yeah, and we've had these conversations in private a lot, so I wanna get your take on this as well, but, like, I I was looking at, like, the investing I was doing, and it was a lot of fun, and partially, I had this, like, amazing cheat code, if you will, or, like, undue access that I was lucky to get because I work with one of the best tech investors of all time, and he has a great reputation, and people want us on their cap table.
I
And I and s or you just go for it.
I was just gonna say, I remember when I got an email from you in like 2019
Yeah.
or 2020, and I was like, "Oh, Teal Cat!" Like, I was so pumped. I didn't know
Yeah.
you, but I was really pumped that I was like, "Oh man, I'm gonna connect with Teal Cat."
Yeah, yeah. No, it's like the Sun Tzu, like, a battle is won or lost before it's fought. It's like an email is won or lost before it's fought, and, like, I'm lucky that I got popped into a role where I had a lot of leverage, and I saw that, and I was like, "Okay, like, on a go-forward basis, I sorta wanna do that in my own way in terms of building a brand around really cool ideas." And then the other thing I think it's just like the macro of venture right now, and I know we've had a lot of these conversations, but, like, look at if you look at, like, late stage venture right now, look at, like, the multiples a lot of these companies are trading at, and then you compare them to their kind of public equivalents that are trading at literally half the
Mhm.
multiples, and then the amount of money that's been raised by these late stage funds like Tiger and Vision Fund and all these sovereign wealth funds. I look at that and I'm like, late stage venture just really whatever the arb was over the last 4 or 5 years, which was like private late stage stuff was actually underpriced,
Mhm.
has flipped. And so I think really if you were to try to position yourself, and this is serendipitous because it's what I would wanna do anyways, it's like what I'd enjoy spending my time doing, is like being really upstream, like playing really early, meeting people before they start companies or right as they're starting companies, and being pretty differentiated in terms of deal flow. And I do think putting out content, specifically content that's weird and outside the Overton window and about frontier tech, which I know you're on the
I mean, that's
bleeding
all I
edge
make
of.
content about.
Exactly, you're amazing at it, and I think doing that is a really cool top of the funnel generator for deal flow, and so I reached out to you because I was like, "This kid is, like, miles ahead of me in terms of doing that, like, actually executing on that thesis," and so I'm just
Yeah, I mean,
trying to
the
be
way that
NASJAQ real quick.
no, guys, I did not tell him to say that. Uh, yeah, the way that I think about it were kind of what got me interested in it was, the Paul Graham essays, of course, but then later on, I was like, "Okay, if I'm a content creator and, like, the late stage is really difficult to make money in, you
Yep,
can kind of, like, create content, and then you have a funnel of interesting people that, like, go into engineering, they're, like, in first year engineering, and then after a few years of, like, you've been making content, they get out of engineering, they wanna start a startup, whatever, and you're the first person that they talk to because like, they've watched your content, they know you're interested in this kinda stuff, like,
totally.
I think that's the deal flow instead of, like, going to a university like, you are going to universities just online, and it's distributed.
Totally, man, and, like, if you do the thought experiment of, like I don't know if he does invest, but, like, if, like, Lex Friedman invested, like, would he get, like, good access to, like, great early stage stuff? Like, for sure, he would. Or even, like, Rogan, if he invested, like, it just, for them, I don't think it's their core competence or that,
Mhm.
it kinda stick within their wheelhouse, and so I love what you're doing, and you heard it here first. When NASJAQ starts a fund, we're gonna back it.
You're gonna back it. Oh, man. Yeah, I mean, my beans will harvest. I know we keep talking about that all the time. Speaking of, like, raising funds, do you want to raise a fund off of your own content?
I think it'd be awesome. Yeah, I would definitely want to whatever I do. I feel like in some ways I was given a life raft and saved by TC and Peter, and so I want him to back whatever I did next.
Mhm.
But I'd be super interested. I think at some point in doing that. I think it is a question of like can you build the brand to the
Mhm.
level where, like, you are getting really good kind of asymmetric access to early stuff where it becomes its own sort of cheat code. And then I do think the activation energy of, like, starting show is, like, is a lot, and then it doesn't necessarily hit cruise control, but things get easier as you figure things out a little more. And so right now I'm still in kind of growth mode on the show, but theoretically in the future I would love to raise a fund. Will you, NASJAQ, raise a fund in the future at some point?
Maybe at some point. Like I mentioned a second ago, my beans should be like a mini venture fund. And then that I don't know, because the thing is like I think I'm deciding what kind of person I am. Like, do I want to have a lot of assets under management and have like a ton of LPs who are my bosses and then build that fund? Or do I want to kind of focus on kind of the content side and my own managing my own money and like making money from content and then investing that into startups. And then also like I own 100% of the gains. So I think that's kind of like my thought process has kind of been most GPs actually maybe they leave a startup job to raise a fund and they don't actually have income streams other than management fees, right?
Yeah.
But if I'm a content creator and I mean, you know, right now, I would say, like, on YouTube, we're not making shit, right? Like, we don't make anything,
Yeah.
but maybe, if the podcast does well and then the beans do and other investments do well, then, like, I have my own money and I'm less concerned about, I don't know. So I think, like, I
Yeah.
can make my own money as a content creator and then use that to invest. And then
I love
also
that.
if I'm investing in smaller companies that are just raising, like, first off, I'm NASJAQ, so they want me on the cap table just for that. Like maybe
Yeah.
eventually, like downstream, like I can promote them, help them hire and stuff like that.
Yep.
And then also, like it's a smaller check required. It's not, a Series D company or something that requires multi-million dollars. So I
Yeah.
don't know. I guess I'm deciding like because now this is about me, but most of my content is frontier tech, and so it'll be very early stage. It's not really Series D kind of investing.
Yep. Yep.
Yeah. And
Yeah, I
so
love that, man. My favorite investors start by investing their own capital, and it shows that they're really high conviction. They're not just playing fast and loose with other people's money. And I mean, for what it's worth, I have no liquidity right now because I put all my own personal capital into all the deals that I do with Peter.
that's awesome.
So yeah, yeah, because it's like if you're not actually high conviction in it, then if you are that high conviction in it, you should be trying to get as much exposure as you possibly can. So,
Absolutely. You should be taking out loans. Like Adelian has a bunch of tweets about taking out loans to invest in startups and stuff. And I think
dude,
his own company maybe, but
yeah, that's funny. Yeah, I mean, I'll say like within reason. This sounds sort of paradoxical. It's like being extreme is sort of necessary for our generation in a way that it wasn't prior. Like the Benjamin Graham, Warren Buffett intelligent investor strategy, 75% of your money in equities, 25% bonds, and then you shift it,
yeah,
counter cyclically. Like that does not work anymore. It
no,
doesn't work. Moderation doesn't work. So I think where it gets tricky is like, are you good at the venture stuff? And like even for me now, it's like most of my stuff's at the IRR is bonkers, but it's mostly unrealized.
yeah,
And
it's
so it's
outpaced.
easy to trick yourself, especially in this market where it's like we have $150 billion of VC locked in to venture firms that like is honestly like it's getting high on its own supply. It's like funneling money towards things that it was, already funding like earlier stage, marking itself up. It's very elusive in nature and it's sort of the gains I think are illusory in the case of a lot of $1 to $5 billion companies that are super frothy. But having said that, if you are good and you really believe in yourself, like you kind of got to go for it because cost of living, if you're a young person to wages is not really doesn't really make sense.
No, no. I mean, just touching on that, like I have no stocks. I have 0 stocks. I'm out
Yeah.
of the public market. Like I don't think about that at all. And
Yeah.
then the last few months, like I spent time in crypto and I made more than I've ever made in my life. And it's like
Totally.
you
Yeah.
have to just have conviction in that. And like my reasoning there was it was shorter term so I could like kind of crush it, make money, and then, venture is longer term because, I'm not going to make $1 million from just investing in a startup, in a year or whatever, because that takes 10 years.
Totally.
Yeah. Yo, what's up, everyone? I hope you guys enjoyed that clip. I have more clips on the channel, and the full podcast is linked in the description. And I got some more cool interviews coming soon. So I'll see you guys in the future. Peace.